Hey, welcome to the channel. I'm Texas' very own, and today we're going to be talking about the stock market. Looks like we've got about 7 minutes until market opens, and so we'll see. We'll see how it goes. We'll talk about some AMC. We'll talk about some GME. We'll talk about some Hog, some Rocket, some SNDL, some AT&T, maybe even some Apple, maybe even some Tesla. So yeah, let's jump right into it and take a look at the charts. So it's not looking too good this morning for old AMC here. The pre-market hours, we saw a big push down, a couple percentage points here. Just about 2.5%. I think I read somewhere we were down like 6% on the day already. Hit a low of actually 13 during the pre-market, so you know, a little bit down, but I think we can hold strong and get a good push. Looks like some decent volume for pre-market. I mean, not really. 35,000. So. Not too much, but we did reach oversold territory during the pre-market hours here. Again, right here on the MACD, looking like we're kind of in a sell territory for right now. We're about to cross over. Looks like we're pushing back up, and we should start to see good chance to buy in right before market opens or right at market open. Let's take a look at a sleeper. Oh, TKAT. Yeah, I thought it was a pump and dump. I think I got in at like $14, got out at like 16, and then this thing just ran up to 40 on Friday. So let's take a look at the 5-day here, so we can see. I mean, major volume pushing into this thing for this stock. I mean, we're at, in the 5-minute chart, you know. Not bad, not bad. Yeah. So let's take a closer look here. Looks like just about 320% in one day. I mean, that's wild, 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 wild. Where did it start at? I mean, we're down at the 6 range. Whew, just massive. No real news. I don't know if anything else has come out. Not just art. This stock's got rid of it. So it's just an NFT play. From my understanding, what they do is they're an art distributor, or I think they even have some kind of art stock market that you can invest and purchase a share of a piece of art. I think that's what I understood. And they also own NFTs. So if you don't know what an NFT is, we can take a quick look at an NFT here. What is an NFT? So non-fungible tokens, or fungible, fungible sounds better, or NFTs are pieces of digital content linked to the blockchain, the digital database underpinning cryptocurrencies such as Bitcoin, Ethereum. Unlike NFTs, those assets are blah blah blah. So let's see what CNN has to say about it. What is an NFT? Non-fungible tokens. Latest cryptocurrency phenomenon to go mainstream, and after Christie's auction house sold the first ever NFT artwork, a collage of images by digital artist Beeple, for a whopping $69.3 million last week, NFTs have suddenly captured the world's attention. Massive. 69.3 million. I know John Legere, the old CEO of T-Mobile, he purchased an NFT from Steve Aoki for, I believe it was $888,000, and I think this was either this year or last year that he purchased that. So it was my first kind of knowledge or introduction into NFTs. Still really don't know what they are as far as art NFTs. Let's see if we can read a little bit more. In the simplest terms, NFTs transforms digital works of art and other collectibles into one-of-a-kind verifiable assets that are easy to trade on the blockchain. Gotta have that morning coffee. Although that may be far from simple for the uninitiated to understand, the payoff has been huge for many artists, musicians, influencers, and the like, with investors spending top dollar to own NFT versions of digital images. For example, Jack Dorsey's first tweet, who I believe founded Twitter, is now bidding for $2.5 million. A video clip of LeBron James dunk sold for over $200,000, and a decade-old neon cat gif went for $600,000. I mean, I don't know what you're gonna do with these things, but people seem to really be interested into it. So why is this phenomenon now taking off? Some of the interest is from people who enjoy supporting the work of independent creators by purchasing their works. Artsy CEO Mike Stipe told CNN Business others are intrigued by the idea of taking a digital asset that anyone can copy and claiming ownership of it. The recent headline price records for NFTs seem to be largely driven by newly minted crypto millionaires and billionaires looking to diversify their Bitcoin holdings and more interest to the crypto ecosystem. So it looks like it's just a piece of digital content, piece of digital artwork that's linked to a blockchain. Another way for people to spend money on. So there could be some other plays in NFTs. Right now, the one that I know of is TKAT, and that one really blew up. So I don't know. Let's see if we think it's gonna hold. So we're still looking at the 5-day. Let me zoom out here a little bit. We got that big blow up here. Looks like that was on Wednesday. Thursday we saw a massive sell-off here. Remember, we were up 322%. Looks like we actually came back down. Not bad. Only and there's the bell. Only a 50-cent pullback. So that's actually a healthy pullback here. I mean, really healthy pullback. You know, considering the day before. Then we rose up again, hit a high of 43.90 after hours between Thursday and Friday. Then Friday just kind of traded sideways, it looks like. So trade sideways pre-market. Let's see here, volume 27. Not too bad. So I'd keep an eye on TKAT, ticker symbol TKAT. Let's take a look at AMC. Looks like we're down already this morning here. Yeah, big red candle for the first minute. Volume 1.9 million. Huge sell-off right now going on. Take a look at the level 2s and see what we got. See if they're going to be trying that crap that they tried last week. Some healthy price action. Looks like it's not possibly not going to close in the red. 1 minute should be done. Let's see here. Oof. Man, we got all the way down to, looks like about 1296. Still kind of going. Let's see. I mean, this is the volume you want to see. This is why I like to say that the first hour is really the power hour, and not the last hour. You know, I get everybody likes to call the last hour the power hour, but I think the first hour of the day there's more volatility. There's more volume being pumped in, especially on a Monday morning, especially after a triple witching day, or a quadruple witching day. Sorry, I think it used to be called a triple witching hour. And then somewhere around 1992 they added something else in there and it became the quadruple witching day. So a lot of volatility this morning. This is what you want to see. So we're looking at almost 3 million for the first opening couple of minutes here. I'm still on the 5-minute chart, so let me switch this back over to the 1 minute. Maybe that's why I'm seeing a lot of volume here, because it's only been 2.5 minutes and we're already at about 3 million in volume. So let me take another look. And yeah, first minute actually not bad. 2 million in volume in the first minute. Kind of died back a little bit. We had a huge sell-off, kind of pushed back a little bit, but looks like we're finding foundation around that $13 mark. We'll see if this holds up. A little bit of a sell-off. Not opening as strong as we would like to have seen it, but It's fine. I mean, if you were to go back and look through all of last week and count how many days did we have an opening sell-off where we kind of either rode out or even pushed up. Maybe hard to find that on a 1-minute chart here or on a 30-minute chart. Let's look at a 10-day, 1 minute. Let's look at how crazy this chart looks. Here we go. So, what day was this? This is Friday here. Okay, so I mean, we had a huge sell-off on Friday to kind of push us down. I mean, we opened somewhere probably about here. Within 11 minutes, we saw 6% loss, and then we kind of trended back upwards to where we were almost flat with where we opened at. So not too worried about that. We see there are some days. Look at this day. Actually we opened with a low candle. We kind of pushed back up, and then kind of traded downwards for the first looks like hour of the day, and before we started to rise. So good time to buy here and get a little quick scalp. I mean, buy the dips, sell the rips, and we're looking at about almost 4% profit there. So within 17 minutes, I mean, 4% is not a lot, but if you got enough in your account, 4% can be very profitable, especially over a long period of time. I mean, you can turn $1,000 into about $10,000 at the end of the year if you just keep compounding those profits, rolling them over. If you only make about 2.5% per day, 3 times a week, that's your if you're under the PDT rule, at the end of the week, and you trade pretty much the whole year like that, making 2.4, 2.5% profit on each of those 3 trades, which I mean, you look down here, take another look. We start to sell off a little bit, and you can look at the indicators to kind of see when you should buy. But if you were looking at the MACD down here, I mean, boom, it's telling you. We start to cross over. Forgive me if I don't know what the name of these lines are, but I know once this blue line crosses over the gold line, it's an indicator that we're gonna start seeing a push, and would be a good time to buy once we see that cross. So you can see we crossed over here, and then the green indicators will tell you that there's more buying power in here, so people starting to buy it and be a good time to buy. So you write it down. If you were to just use those indicators alone, we never reached oversold territory on the RSI here, but let's just use that. I mean, we start to cross over there, and you can kind of see it looked like they were trying to sell it. We hit that level support here, and then closed out higher up, and then boom, right in here. This is probably where I think I would have probably taken a chance to buy. Once we start seeing this peak here, I mean, I probably would have wrote it out a little bit longer, to tell you the truth. But even if just that short, that's 2.27% right there. I mean, your 2.5% over here, so you could have set it at 2.5%, 14.50. You could have bought it in at what about 14.17? Yeah, and sold. Set your limit for 14.50. So not bad. That'd be one of your trades for the day, and you'd be wrapped up until tomorrow. So let's go to a current view and see where we're at. So this sell-off is not worrying me too bad. I mean, we're reaching below 13 right now, which isn't good for my options contract, but it is what it is. So this could be a good time to buy right now. Yeah. So we're gonna see this here. Well, a little late to buy in over here, but we're here now. So if you can get it for less than 13, let's see what it does. I mean, if you were watching this, we still haven't crossed over down here on the MACD, but look how oversold we are in the RSI. So massively oversold right here. Good time to buy. Still good time to buy. I think this thing keeps pushing up, and even if we just get back to this level, I mean, there's still money to be made here. I mean, that's almost 3% right there. So if you can buy this thing for under $3 and sell it about I'm sorry, under 13 and sell for about 13.41, you're gonna make some good profits here. This would be a good time to swing trade this. I'm already in for the long haul. I don't think I have much to put in here. I could probably do that. Let's see what happens. Looks like we're still gonna stay oversold. They're really pushing this thing down. I'm just trying to show you guys that there is potential to make some money, even if you have a smaller account. You know, you just take that 2.5% every day, and you can just keep rolling it over. Volume is doing okay. It's not too bad. I mean, looks pretty close to average of what we're seeing. I mean, opening though at 2 million in volume is massive. I think we're going to see that throughout the day. I think today's going to be really volatile. I think there's going to be a lot of volatility, a lot of volume, maybe a lot of ups and downs. I think at the end of the day, I think we're going to finish in the green today. I think a lot of hedges have to cover their shorts from weeks ago. Their FTDs. I don't think that they're even trying to cover right now from last week's shorts. I mean, they were shorting millions of shares throughout the week, and especially on Friday. So at some point, they're going to have to cover those shares, and especially with the new DTCC rule, they're going to have to cover those shares. DTCC is going to step in and say, look, we're not covering for you. You know, you guys are just steadily losing money because the price is just going up. They keep shorting, but the price keeps going up. Yeah, they can probably make a couple of pennies back if they sell these shares and just kind of stay in that barcoding, which is what they did on Friday. If we go back and look at Friday and how they manipulated the market here, I mean, just massive barcoding. Once it started, let me zoom out just a little bit more. Once they started to do it, it was about between 3 and 5 hours here. I mean, they started roughly about here, so looks like it was about 11:30 and just really barcoded without any kind of drop to about 1:30, but really all the way to 3. So from about 11:30 to 3:30, I mean, just about 4.5 hours or so, depending on when you start and stop this thing. Just look at, I mean, nothing. Just crazy that they just kind of bought sold the whole time just to keep the price at the way that it was. So they really did not want to close above $14, and you know, they succeeded. They won that fight with a massive push to get us down. And right, you know, we tried a little too late here. Looks like that volume just a little too late. So I'm not able to tell. I don't know if this volume is for the entire day on Friday. It says 48 million. I don't think so, but if that's 48 million for just the first minute of after hours, that's wild. I don't think that can't be 48 million, but I also don't think that this 48 million for the whole day, because that seems pretty low. So anyways, let's get caught up on what's going on right now. Huge sell-off still. Looking at just under $13. They're trying to push this thing down here, but good news is we see a lot of volume pushing into the day. And man, I should have probably set some levels here. I said right about 13. Looks like they're going to try to consolidate this thing right under $13. So I always see potential in AMC. Look, we're starting to cross over on the MACD here. RSI is telling us that we're starting to get into some buying territory. Let's take a little look out. So volume's kind of tapering off a little bit, but I think people are just kind of waiting it out. I think we're going to see it throughout the day. Lots of high volume. So 12.89, even better price to buy in at if we think this thing can push up a little bit. Right now, it may just stay and consolidate a little bit. You know, we were oversold down here, so even for here, if you saw this and were able to get in, you're looking at 4.5%, just kind of quick in and out scalp. Now, a lot of people tell you that we just need to hold. We need to be diamond-handed apes and hold strong. But I'm all about making money. That's why I do this. So if you think you can get a quick in and out, I mean, hell, you guys can see my screen. I've got my AMC position here. I'm long 288 shares, so not a lot, not as many as other YouTubers or anybody else. But hell, I'm doing my part. I mean, I have to diversify my portfolio to cover my ass because you cannot put everything all into one basket. That's why I've got some options. Some of these positions I've held for quite some time. The Harley Davidson one, actually, I thought with them releasing the live wire EV bikes was going to be like the future, and it still may be the future. However, for right now, they're just not there. They took a massive hit for COVID. The Harley Davidson is going through a major restructuring and rebranding. Matter of fact, I think they got a new CEO this past year. At least they had a placeholder for a little bit. So I still think that they have potential in the EV sector. I mean, they're one of the most established motorcycle brands in the world, and now they have a production EV bike. So why would you not want to buy from Harley Davidson or think that they could, as long they've withstood a lot of things. They've been a company since I believe 1913. I could be wrong, but more than 100 years they've been a company and they've been around. And times are changing, people are changing, their demographic and consumer base is starting to slowly change. And I think they're ahead of their time in some of the areas, and they're maybe a little bit farther behind times. But if you look at the new Pan America, the adventure touring bike that they've got releasing coming up here, I believe in 2 months in May, you can see the demographic that they're trying to go. They're trying to broaden their customer base. I know they'd opened plants in India, I believe, 2 years ago, and they're making smaller CC motorcycles. Here in America, we like to buy these huge, massive 1,000cc motorcycles. I mean, pretty much anything you get at Harley, it's we say in cubic inch, so it's for whatever reason, I don't know why, it's wild to me. Why can't we not just use cubic centimeters? But they like to have cubic inches, so just to kind of I think throw people off and say, oh yeah, I got a 107 cubic inch engine or 114 cubic inch engine, versus someone who's like, hey, how many cc's is that? That's the first thing a lot of bike guys want to ask, how many cc's is that? And then Harley, you can just like, oh man, it's 107 cubic inch. Well, what is that? That's about 1,700 and something cc. So it just kind of throws people off. They're massive engines, but they have a lot of low torque. So I believe in Harley Davidson as a company. I'd taken a huge hit over with them for the last year. I'm actually only down about $6, probably roughly 20% in my position with them. Matter of fact, we can take a look over here. Yeah, my average price is at $40, and I don't have much in there, just a couple thousand. Like I say, diversify your portfolio to cover yourself, because you don't know what's going to happen. Almost everything took a hit during COVID, and I was in an oil pipeline partnership. I was holding some other things, Knoll Brand being one of them, and I believe Carl Icahn either became the CEO of Knoll Brands or he took over something with them and kind of turned that company around. And I'll show you that one here in a sec. Let me get out of this active trader here. But Harley, if we take a look at the 3-year, we're down from $46. We got down all the way to $14 last year in March of 20. Wow, good time to be buying up. But me, I I didn't really have a lot of money to put into it last year, especially with where it was going. And you know, the company's been kind of on the ropes for a while now, so we just don't know what's going to happen with them. You can see some stuff here. When was this? Back in February. They did have a dividend that was released, I believe, last week. Um, February 19th or the 21st. Don't quote me on this day. Somewhere around the second end of the second to the beginning of the third week in February. They released the full specs on the Pan America, and then I believe on January 19th or 17th, somewhere around there, same kind of time frame in January, they announced their 2021 model lineup, which really didn't change anything. Changed a couple of things, some badging and some paint and stuff like that, but nothing really crazy. But you saw it kind of shoot back up. So and maybe with the new CEO, they'll do something here. So, oh, they did announce Ryan Morsey as Chief of Electric Vehicle Officer. So that's actually sounds like a new title to me. I don't know if, yeah, it's first Chief Electric Vehicle Officer. This is March 10th, so it's good for them. So they're sticking with the EV sector. We'll see how it pans out. I'm still holding. I really was sort of taking this opportunity in here to buy in, but if you guys had the money, you know, it's unfortunate for what had happened all of last year, but there were a lot of good times or good stocks to buy into. I mean, you're looking at 180%, you know, which is wild, 180% return. So that's just on Harley Davidson. And I think we're seeing that with a lot of other stocks here. AMC looking like it's still consolidating around 1260, 67, 68. So let's take a look at Knoll Brands and kind of see where they're at. They're actually looking pretty good. Sitting at 26.08 on the day right now. Strong stock. If you guys don't know what Dual Brands is, I believe they own Rubbermaid. They've sold off some other companies, but they own Yankee Candle, Jostens, Rubbermaid. Just a lot of retail companies that you would find in Bed Bath & Beyond or Walmart, Target, stuff like that. They sell a lot of those companies, so they have a huge amount of companies that's within them. Let's see if we can actually analyze. What is this? Yeah, I thought there was gonna be a spot. You know what? Here we go. That's why. For some reason, it doesn't tell you. So, Knoll Brands is a consumer goods company. The company has a portfolio of brands including Papermate, Sharpie, Dymo, Expo, Parker, Elmer's, Coleman, Marmot, Oster, Sunbeam, Food Saver, Mr. Coffee, Graco, Baby Yager or Baby Jogger, Nuck, Califon, Rubbermaid, Contigo, First Alert, Yankee Candle, and probably a ton of others. The company operates under three segments: food and appliances, comprised of appliances and cookware, and food divisions; home and outdoor living, comprised of home fragrance, outdoor and recreation, and connected home and security divisions. So, and learning and development, comprised with of writing and baby and parenting divisions. Okay, that seemed just weird. A compromise of writing and baby and parenting divisions. Okay, so they could have just put a comma there. Anyhow, so they used to have a good dividend. Looks like it's currently at 92 cents. I believe this is on the year. So from which has actually stayed the same year over year. Surprising, where everyone else cut their dividend, they stayed the same. And I would imagine that they did not cut it at all at any time in the last looks like 4 years. So 5-year trend showing that they're actually going up on their dividend per share. Their earnings per share kind of going down. They're actually year over year down 113%, which will correlate that with what happened in the pandemic of last year. 76 cents in 2016, 88 in 2017. 92 in 2018. So for the last 3 years, their dividend has stayed the same. So that's kind of why I got into it. When I first started investing, I invested into companies that had a good dividend percentage. So it looks like they pay out 15% of their earnings in dividend. Um, let's see if I can find it here. Dividend yield, not bad, 4.3%. So, and dividend payout per share, percentage of EPS or earnings per share, 31%. For me, I just looked at this dividend yield number right here, 4.3% of what the stock is currently trading at. So, if you think about a bank account, a savings account, the interest that you're getting on that is usually less than 1%. Now, you can have like some accelerated savings accounts where you can earn up to 4% per $1,000, or with a maximum of $1,000. You may even, I think in a credit bureau that I'm a part of, I have 3 different savings accounts because you need one to open it. You need one that has a good interest rate for the entire account, and then one I have which is like a super accelerated, and it's only up to $1,000. I can get up to like 4% or something crazy like that. So, you know, I think it's good to invest in the stock market if you just want to put your money in here instead of a savings account. Now, I don't know about the capital gains taxes of stock market versus something else. If you don't plan on taking your money out for a very long time, you can make some good money. AT&T is one of those stocks here, and I don't know why they're saying reduce here. Matter of fact, let's go back to the chart here and look at no brands, because I'm not suggesting that anybody buy this stuff. You can see right now, I mean, on a 3-year, 1-week chart, we were at a high of 28.38, so almost back to that high. I mean, there's a little potential there between here and there, but for me, I was in this for a dividend play, and then I got lucky enough that when this thing dropped, I think it had dropped over a very long period of time. It kind of pushed back up when Carl Icahn took over, and then I sold out. I made a little bit of profit, not much, but the 2 years that I held on to it, I gained those dividends. For a year that I held on to it, I gained the dividends. So let's go over here and take a look at ticker symbol T for AT&T. Now, I've already put some stuff in here. This is on the 3-year chart. Now, I don't know what happened with this massive sell-off here. Looks like it started around February of 2020. I don't know. What do you think happened? We just saw a huge dive in profit here. I mean, all the way down. That's about 30%, so that's pretty rough. Currently, we are sitting at 29.89, and I think this thing has potential of up to around that $39 mark. I mean, that's the high for the 3-year. We were kind of having a sell-off here throughout, or we're trending downwards, and then we started trending back upwards. So I don't know if this is just healthy price action in the stock, where we're going to see some ups and some downs, a little roller coaster ride, and that's just healthy buying power, healthy price action in the stock. So potential that I see in this stock, if you just want to try to swing trade this thing, and it could be a long-term swing trade. I mean, we're talking about months here, like a 6-month trade, maybe even a year trade. But what I see is about a 30%. I mean, 31% here. So not too bad. 30%, it's going to take a lot more than 61 days. I don't, so it's, we look way out here, but I think there's potential there. But the other good thing is that AT&T, ticker symbol T, they have a very good dividend plan. So, and they've been very strong. Their year over year is actually increased 1.44% from 19 to 2020. So currently they're at $2.08 a year on their dividend. Dividend yield of 7.23%. 7.23% on a stock or a company like AT&T. Do you think AT&T is going anywhere? And through all this stuff, they didn't reduce their their dividend. It looks like they actually increased from 19 to 20, from $2.05 to $2.08. Now I don't know what happened in 2018. Maybe they canceled for that year. Typically, companies will do that. If they start getting in to some bad territory where they feel that they got to withhold that dividend to kind of invest it back into the company. I don't know. Maybe that's what they did. But anyhow, if you look at that jump from 197 to 205, hey, if they skipped 18, they came back strong in 2019 and gave you a substantial 8 cent increase here. So they're increasing it year over year. Earnings per share definitely has gone down, but that's like what we showed, in the chart, that it's a little down. So that's why we think it has potential for a swing trade, for a long-term swing trade, maybe a 6-month trade, maybe a year trade. I don't know. Or maybe this is its new holding area for a while. But I definitely like the look of this dividend here, 7.3%. I mean, that's why I'm invested into AT&T. I think it's a good, strong company. They do have the highest debt of any company in the world, from my understanding. I believe that's what I had heard before. We'll see. With all stocks, you can't never just look at one area and say, oh man, this is a deal breaker for me, or this is it, this is that. But most everybody says hold this thing, and that's kind of where I'm at. It could be a tempting price point if you think that it's going to go up. Right now, since I've held on to it, it hasn't really moved that much at all. I'm maybe up about between 2 and 4%, which is not bad. Plus, if you can get a dividend in there, that's pretty good. So let's go back and take a look at AMC and see where we're at. And let me change this to the 1-day, 1-minute chart. So not looking good on the day. I mean, not looking too good. So just when you think we're going to break over, start to get a good push of buying pressure, we're just kind of stepping down, little stair steps. So this is not really what you want to see right here, truthfully, and I don't know why that is. Let's see if they have some news. Let's see, this is from March 22nd, 2021, which is today, 9:44 a.m. Eastern Standard Time. During Q4, AMC Holdings, Entertainment Holdings reported sales totaled $162.5 million. Despite a 43.56% in earnings, the company posted a loss of $969.6 million. In Q3, AMC Entertainment Holdings brought in $119.5 million in sales, but lost $675.4 million in earnings. So I guess that they just have to report this, but I mean, we know the whole country was shut down, the whole world was shut down for a year. What do you think? So to me, I'm not looking at earnings, not for this quarter. Maybe you can look at Q1 to see how well they did, and even then, Q1 just ended. So yeah, I'm not taking too much into it. As a matter of fact, has Q1 in it? I'm pretty sure Q1 in it. So for me, AMC, I think we're talking about investing here. Let's take a look. I mean, you can look at the 188 chart. I think let's take the 3-year chart. So let me get rid of the news here. So this is about matter of fact, hold on. Let me take that off here. So we're going back to 2018, just before the end of the year here in October. We reached a high of $20.70. So we've kind of fallen down here from there all the way down here. That's about 89%, all the way down to $2 and some change here. Nothing, pocket change. All right. But look at the dates here. That's April, May 2020. What happened? I don't know. Yes, it was trending downwards for a very long time up until that point. all of the 2019 year. Looks like we were kind of just trending downwards. So who knows there? Could it just be streaming services have finally taken their toll and pushed them down? I don't know. But I think, and this is me, I know a lot of people are in this thing for a long-term hold, and they want to hold forever, but like I said, I'm here to make money. And with what I see is that there's potential for us to get back up to this $20 range. I think it is a $20 company. I think people do want to go to the movies, and I think they always say you miss what you don't have. So, you know, we lost the movies for a whole year. I think a lot of people actually missed that, and I think they took it for granted that, oh, you know, I can just watch the movie at my house. I can just stream it on my TV. But I think that a lot of people are going to want to start going back to the movies, and it will be that way for a while. I think that what you're going to see is you're going to see in Q3 and Q4, especially in Q3, you're going to see a lot of earnings for AMC. I think that that's when you're going to see a big push for earnings, and this thing is going to top out here. So I'm in it for a long-term hold. I'm also here in it to make money. So at worst case scenario, I think $20 is where we get to, and from where we're sitting at now, about 12.16, not very good for the day. If we just get to right about 20 bucks, I mean, we're still looking at a 66% increase, so there's time for you to make money in this stock. You may have to hang on to it until end of quarter three, or if we get this gamma squeeze in a short squeeze, which is potential because I think they keep shorting this thing like crazy, then there's a good potential that this thing is going to go up even higher than that. So right now I don't believe that they do have a dividend. I'm not playing this for a dividend. I'm up about 50 to 60% on my position right now. And I've only been holding since we were about the $5 mark. I think I had scalped a couple times and ended up now I think my average price is like $8.57. I kind of averaged back up, bought more shares as I could, along with some options contracts, which let me be real, they are not looking too good. I've got one for June 18th. Currently down probably about $62, and then I've got one for this Friday, which is down about $60 on two of those option contracts for this Friday, expiring. I believe it's a $16 strike price that I've got for here. So I don't know. You know, I figured I would take a gamble, and if we get a huge jump, then hey, if we get up to $16 very quickly before Wednesday, and I go into the green on that options contract, I'm going to sell. That was the one thing I learned last week. I held on to some $14 strike prices for Friday expiration. And I think after the first day, I saw green, and it was a substantial amount of green for only like a $200 investment. It was like 50 bucks. And I thought, no, man, we're gonna get to $15, $16 this Friday, and no, we didn't get there, and Theta Decay really ate my option contract up, and I end up losing all of it, I think, except for like couple of cents, you know, and you still have to pay the fees when you sell that thing. So I sold it within 2 minutes of close, and I think I made a couple pennies. I mean, now I know, like, when you're down bad, hey, you know, quit hanging on to hope. At some point, you know, you gotta cut your losses, stop the bleeding, and take what you can, try to salvage whatever capital you may have in that, and get some of that back. So you know it's almost like a stop loss. But I kind of threw it on the table and let it ride. It was my first options play, and I thought, you know what, this is just a gamble. This is money that I'm willing to just throw away, because in 3 years of investing, I've never lost money on a trade. I'm kind of a hard-headed, stubborn ape where I like to hold on to it until I get that money back, and I've done that with Callaway Golf, I've done that with No Brands, I've done that with Martin Midstream Partnership, I've done that with Ford, I've done that with Harley Davidson, who I'm actually currently still holding. I've done that with many other companies that I had invested into, but with those companies, I invested into good, strong companies that I had thought were good and strong, that had dividends, so I was getting money back through the dividend, and it's like, hey, you know, I'll hang on to this. I mean, yeah, I may be down like 50% in my portfolio for the whole year of last year, but now I'm up probably 15%, in my entire portfolio. So, um, if you believe in the company, you can just hang on to it. If you think it's a really strong company and you're in a down spot, and I think that's why people liked AMC. I think that people really value AMC. AMC's been around for over 100 years, and people really think it's a strong company. I think what you saw this stair stepping down here was that just streaming services really taking a toll. People just kind of taking it for granted. And I think with what happened all of last year, I think that we're not taking AMC for granted anymore. And I think people are going to start going back to the movies, and we're going to see an increase here. How high of an increase will it squeeze? I don't know. But I do think that we can get to this $20 mark. And so for me, I'm going to start looking around here and seeing where it goes before I even think about taking any kind of profit. I want to see what it can do. Not looking hot on the day. Not really what we would like to have seen. We're reaching down to $12 here on the day. Just huge sell. We've got some volume in here though. 1.68 on that 1 minute. So not bad volume. Yeah, it's trading down. Just being sold for whatever reason. Not really sure why. Let's take a look at the level 2s and see what we think is going on here. Yeah, just pushing this thing down. Looks like it's gonna go. Yeah, and it is low of 1187. So we'll have some ground to regain come next week or later this week. So looks like I'm out on another 2 options contracts, but it is what it is. This would be a good time to buy. Great time to buy. See where it goes. If it keeps dropping down, just pick up a few. So if you've got some money, divide it up. Put a quarter in here. Or even if you would have started down here, put a quarter in here. Put another quarter in, somewhere down here. Put another quarter in here. Just keep averaging your price down. If you guys are in this for the long-term hold, this is a good time to average your price down, because for all of last week, you weren't able to buy this for the price that it is currently. Yeah, unless you got lucky here on the 15th. You were not buying this at $11.80. So almost the entire week last week, you're not able to buy this thing for less than $12. So good time to buy. That's my opinion on it. And I'm not telling you guys what to do. This is just for entertainment. What's a stock? When you get looks like we got some jokers here. I'm pretty sure I know that was Andrew asking what's a stock. Andrew, this is a stock. Fern, I don't know. Doesn't look like we're getting in Lambos today. So might get a Toyota Corolla today, but I don't think we're getting Lambos. Let's take another look. Let's take a look over at Palantir. See what they're doing on the day. Man, not looking good, but again, good time to buy in. So if some of these stocks that you believe in and these companies you believe in, and you thought they were like, I want to get in, but it's a little expensive, I think now is the time, to get in. Look, I mean, we're down almost 90 cents on the day right now. This is one that I'm looking at, Palantir. So if you guys don't know what Palantir is, let's take a look over here. at Palantir, and I'll tell you what they are. Palantir Technologies Incorporated builds software platforms for institutions. The company operates two segments: commercial, which serves customers working in non-government industries, and government, which serves customers that are agencies in the United States federal government and non-United States governments. So, okay, you could have just said government and non-government. I think we would have understood that. So, it has built two software platforms, Palantir Gotham and Palantir Foundry. Gotham, anything with Gotham in it, it's got to be good, right? Is a software platform which is constructed for analysts at defense and intelligence agencies. Gotham enables users to identify patterns hidden within data sets ranging from signals, intelligence sources to report from informants, and helps United States and allied military personnel. Foundry creates a central operating system for organizations' data. Individuals, users can integrate and analyze the data. So, yeah, data software company that analyze stuff and probably use on the battlefield. No dividend here. Market cap of 43.7 million. Total shares outstanding looks like 1.8 billion. So, price earnings ratio down 35. Operating profit. So it doesn't look like they're very profitable right now. Let's see the kind of news. I just know that Palantir is big right now. With a lot of the Wall Street Bets guys, a lot of other YouTubers. If you guys want, there's any like real detail into Palantir, check out Max Marr, his YouTube channel, or Andrew Momoney. I think both of those guys did deep dive, in-depth videos into Palantir Technologies and what they are and why they think that they're a good company to invest in. Return on capital employed is a measure of yearly pre-tax profit relative to capital employed by a business. Changes in earnings sales indicate shifts in a company's ROCE, or return on capital employed. A higher ROCE is generally representative of successful growth of a company and is a sign of higher earnings per share in the future. A low or negative ROCE suggests the opposite. In Q4, Palantir Technologies posted an ROCE of negative 0.1. So, not so good, but not so bad. I guess it actually is bad. So, keep in mind, while ROCE is a good measure of a company's recent performance, it is not a highly reliable predictor of a company's earnings or sales in the near future. Return on capital employed is an important measurement of efficiency and a useful tool when comparing companies that operate in the same industry. A relatively high ROCE indicates a company may be generating profits that can be reinvested into more capital, leading into higher returns and growing EPS for shareholders. In Palantir Technologies' case, the ROCE ratio shows the amount of assets may not be helping the company achieve higher returns. Investors may take this into account before making any long-term financial decisions. So, there's never any one indicator or story or D&D that you can look at to tell you whether or not a company is good. You got to make the decision on your own. But there's another thing that I didn't know of, return on capital employed. So, will be one more thing for me to stick in my back pocket when I'm making my decision on what I want to invest into. But I know you guys want to see Palantir, so what else we got? Let's see what GME is doing on the day. I think everything is probably going to mirror our AMC charts here. Let me get rid of this. Yeah, kind of a big sell-off. So sitting at 195 right now. I think that's going to be everything across the board. Let's check out the SPY, which is an ETF of the S&P 500, which is actually the opposite of what. So the whole industry is actually doing better than our little stocks over here. So they are actually up on the day here. They're sitting at 391. Looks like they opened somewhere about the 390. So $1. $1. So did a lot better than Friday, but they're actually pushing upward on the day. So what do we got? Rockets. This was a pump and dump kind of play. I knew it. I chased it. I got in. I got burnt. I'm left holding the bag. Luckily, you can see I've only have 2 shares. Average price of $29.65. Hey, I'll hold this. Whatever. Maybe one day they get a big pump and they get back up to where they were at. Let's check out the 10-day here. Yeah, 28.68. So doesn't look like I'm gonna get there anytime soon. Check out the 180-day. They were here before. And I don't know if this was something that this was their initial push up, because to my knowledge, I don't know how old Rocket mortgage companies or Rocket, how old they are. I've only known about them for a few years, so could this be like when they... No, this is only from 2020, so what am I talking about? They've been around for a lot longer than 2020. So they had a big push here. This is, well, what am I on? Let's look at the 3-year. Okay, so over a 3-year period. No, that's not. Here's a 3-year. Actually, yeah, only going back to 20. So I don't know if this was a new IPO that they had gotten, which that's what it's looking like to be the case here. Had that push and then kind of traded down as IPOs typically do. And we'll take a look at Roblox here in a sec. And they just kind of trade sideways and consolidate to kind of figure out, where they should be, what their market value is. And I think this is what they figured out. And then for whatever reason, we had a huge push up to the high of $41. So, yeah, we're kind of stepping down. And if we step down back in here, it is what it is. But we know we have potential. I got 2 shares. I'll just hang on to them. I don't think that Rocket has a dividend, and it doesn't look like they do. It doesn't look like they ever have. Could that change? I don't know. Possibly. So I'm left holding the bag here. So that's why I don't like to chase. I got in on TKAT last week. And I thought I was going to be chasing, so I just messed around. I think it was only like 1 share. I mean, just to kind of see, just to test my skills, right? So if you don't have a lot of money, of course you don't want to lose it, but you want to invest. Either in my opinion, there's 2 ways to do it. And one, it's either you can funny money trade. I know Thinkorswim, TD Ameritrade Thinkorswim platform has a paper trade option whenever you log in that you can turn over, and you can just trade with some kind of funny money. Or just trade with a very, very small amount and kind of see, trade with less than $100 and just kind of see. Just give that $100 as this is my learning money, So yeah, huge push up. Yeah. I mean, just went crazy. So I thought like, oh, this is just gonna be a one day ordeal, kind of like RKT was, which actually I think RKT was like 2 days, which pretty much here, kind of same deal. I didn't think it was gonna run where it did. I mean, that's massive price action here of about 700%. I mean, if you guys held this before, and I don't know who you are because I didn't know what the hell TKAT was. If you guys had TKAT back here when it was at $5-6, I mean, you made some profits. Hell, if you had this back here, I mean, this is crazy. This is on March 10th. March 10th. If you held this in the second week of March, this is only 12 days ago. 2 weeks ago, if you held this at $2. Let's check out this kind of run up here. You're talking about 1,500%. 1469, 1,500%. So let's take a look at Roblox. I believe that's RBLX. Roblox Core. So they opened their IPO here, I believe, on this day, March the 10th, kind of the same day. Maybe that had something to do with TKAT. That's actually I wonder. I wonder if Roblox had something to do with TKAT in some kind of weird way. I don't know. But you know, they shot up after hours to 92. Looks like they probably opened. Take a look at the 20 days here. Um, yeah, looks like they opened about $64. Kind of traded in between there. Usually, IPO openings are very volatile, so I hear it's just kind of best to stay away. But you can make some profit in there. I mean, if you would have bought in here, you could have made some profit in the after hours and pre-market hours up to 90. But as you can see now, I think we're going to go through this consolidation phase of somewhere between about $66 and 78. So there are some areas within that range that you can make profit. 15% profit. I mean, you know, you could swing trade this thing, I think. We'll see. It's still consolidating out, so who knows? This price action might get a lot tighter in here, but if these waves stay as big as what we think, you know, could be it. Yeah, I mean, quick 10% from where we're at now. So, you know, something to think about. For those of you who don't know what Roblox is, from my understanding was I thought it was a game. I think my nephew plays Roblox. Hell, I don't know. Um, so let's just take a quick look. Roblox Core. RBLX. Roblox Core is a technology company. The company intends to build a human co-experience platform that enables shared experiences among billions of users. The company offers a platform which is powered by user-generated content that draws inspiration from gaming, entertainment, social media, and even toys. The company is focused on improving in the ways in which the Roblox platform supports shared experiences, ranging from how these experiences are built by an engaged community of developers to how they are enjoyed and safely accessed by users across the globe. All Roblox platform users have identities in the form of avatars that allow them to interact and express themselves as whoever or whatever they want to be. So sounds like a virtual reality world that they're trying to create here, some kind of virtual reality Facebook gaming world. So sounds pretty cool. Currently sitting at 71.95. Holding the bag, holding the bag. Yeah. Maybe one day soon we can join up, do a joint stream here. Sensonics. So Sensonics is a diabetic medical what's the word? I'll just read it off the chart here for you. But from my understanding is they have a glucose monitoring system, and right now their competitor offers a 3-day replacement. So every 3 days you got a patch, you got to wear it, you got to pull it off. And they've got a few options now. I think one that is actually currently on the market, I believe, or coming to the market here in the U.S. very, very soon, which is a 90-day or a 3-month patch. I think they just got FDA approval for a 180-day patch, and they're working on a 1-year patch. So there's potential in Sensonics for the future. Let's just take a look. SENS. Oh, shoot. So, Sensonics Holding is a medical technology company. The company focuses on the design, development, and commercialization of glucose monitoring systems. The company operates through glucose monitoring system segments. It offers a continuous glucose monitoring, or CGM system, Eversense. That's the name of their CGM system, which is a designed and implantable CGM system designed to continually measure glucose levels in people with diabetes or diabetes. The company's Eversense system consists of components such as a sensor, which is inserted subcutaneously in the upper arm by a healthcare provider, which I'm imagining is just like in the skin. An external removable smart transmitter that receives assets and relays the data to the sensor, and also provides vibratory alerts, and a mobile application that receives data from the transmitter, provides real-time glucose readings, alerts, and other data on the user's mobile device, such as a smartphone, Apple Watch, or tablet. So pretty sweet that the days of pricking your finger are almost extinct and over. And yeah, you can just wear this thing, and you can get alerts on your Apple Watch. So it's going to be pretty cool for all my diabetics out there. Um, But right now, I think it's a long-term play. I don't know why they're saying sell. You know, I don't listen to any of this stuff in here most of the time. So I've got a range within here of where I think it could kind of get up to. We'll take a look at, you know, if you're just looking at a quick swing trade profit, that's 20% there from down where it's at. So I mean, 20%, I don't look at the dollar amount like, oh, I need to make $100 or $50 or $10 on this trade. I look at the percentage. You know, for me personally, I think that anything over 5% is a good profit. I mean, 5%, that's better than any savings account that you're going to get. I mean, that's five. Go look up savings accounts. Look up what the average annual percentage rate is on a savings account, and you're just not getting your money's worth. I think it's safer. Let's see, safer. I say it's smarter to put your money into the market and let it ride out, and you'll get better returns if you know what you're doing. Of course, nothing is safe. At least if your money's in a savings account, it's FDIC insured. So take that with a grain of salt, as what you will. So this is only on the where am I at here? I'm on the 20-day chart. So over 3 weeks, you can see kind of where we're at. So not sure why I had this line of consolidation here, or this line. It must go back to something else. I think we just found it as a level of resistance at one point. So I've just kind of held that. I think that's kind of what it was. We also held this level here as a line of resistance, and that's currently where we stand now. So I think once we break above this line of resistance here at $3.20, we've got potential before we see the first real level of resistance is right here about this $3.90 mark. So let's take a look. Yeah, we kind of just poked over. This is take that with a grain of salt also, because this is pre-market hours here, and as we probably know, pre-market and after hour markets are, then they go crazy sometimes. They just they go wild. But looks like we might have hit that again here. Okay, so this is right on open. We hit it again here, so at 390. So I like this $3.90 mark if we can push above this $3.22 mark here, and we just kind of been floating around there. So all we need is some big news. Looks like we might have got something on Friday. Maybe this is just volatility because of the quadruple witching day. USPTO site shows Sensonic holding granted patent for remote analyte monitoring. This is on 3/16. So, yeah, I knew they had gotten some kind of patent approved, and I thought it was a 180-day patent. I think that they did get that. I think that was last month when they did get it here. You guys can look that up. But I think for the long-term play, Sensonics, it could be good, especially once they get that 3-year CGM or monitoring system. Let me actually go back and take a look here. Eversense. So the name is Eversense. Sensonics, Eversense. Okay. Continuous glucose monitoring, CGM. All right, so I think in the future, once this 180-day CGM comes to market, I think that this stock could be something up here. So I think I got this one from Trades, who he talks about this one. He really likes it. He really likes Microvision also, which is a LiDAR company. And we could take a look over there at Microvision. Oh, shoot. I believe it's this one here, MVIS Mavis. So we are still on the 20-day 1-hour chart here, time frame. Looks like we had a high about $21 for this period. This was like 20 days ago. Kind of a low at $10, which would have been a good time to buy in. So this is kind of a riskier play. LiDAR technology is the future. And I know Elon Musk has said that he doesn't like LiDAR, but LiDAR could potentially help Teslas become autonomous self-driving vehicles, because you need LiDAR for that. So I think the reason why he doesn't like it is because the technology is so expensive. So let's take a look at a little bit about the company here. So Microvision Incorporated is ticker symbol MVIS, is a developer of a laser beam scanning technology, LBS, which I'm pretty sure is like LiDAR. I guess we're about to find out though. The company markets its technology under the brand name Pico P. Pico P, I like that. It has developed scanning technology that can be used in products for interactive projection, consumer light detection and ranging LiDAR, automotive LiDAR, and augmented and mixed reality. Pico P scanning technology that can be adopted by its consumers to create high-resolution miniature projection and three-dimensional sensing and image capture solutions that can use laser diodes as the light source. The company offers key components for inclusion in a scanning engine, including its microelectrical mechanical systems and application-specific integrated circuits. The company's Pico P scanning technology incorporates its expertise in two-dimensional MEMS or MEMS, laser and optics, and electronics to create a small form factor scanning engine with lower power needs than many other technologies that projects video and still image to capture three-dimensional data. That's kind of weird. I know in some other languages it's all about tones, so you can say projects data or projects video or projects video. So sorry, that was just kind of odd here. But they're basically a LiDAR company. Look into augmented reality, mixed reality, interactive projection, and automotive LiDAR. So actually sounds really cool that one day that I don't know, maybe they can have like the Star Wars projection phones or something. I mean, there was a phone a while back that had a projector on it. That was kind of weird. I don't know if it ever really came out, but it was like a 3D hologram. So sounds like more like a hologram style stuff. Excuse me, with this LiDAR. But I think some potential is there, especially if they get bought by a company like Tesla. I mean, can you imagine if Tesla were to come in and buy this company? Potential is definitely there. So, you know, just kind of an up and down stock. I think that you'll have some time to buy this thing back down here. You know, I think it's going to go through these consolidation periods. I mean, hell, just look right here. I mean, we've kind of bounced in there 1, 2, 3, almost there the fourth time. Not quite this fourth time, and today we're kind of selling off. So I don't know if today's just a weird day, and that's why, you know, it looks like it was trending up, like it was going to push and then test that level of resistance. So I think now we hit it the 1, 2, 3 times, didn't quite make it on the fourth try. I think we're going to start going down. You know, the nearest level of resistance is over here at 1595. So somewhere about there. We'll just keep an eye on that. Oh. Yeah, I'll set something there with potential to even go a little lower, 14, and then all the way down to 10, which I don't think it's going to go all the way down to 10, but who knows. So we'll keep an eye on this thing. We'll kind of see what this thing does. Let's go down to the 1 day, 1 minute chart. So down from 1838 to 1676. Could be a good time to buy here. We don't know what's going to happen, but you know, if you go back out and take a look, we've got some potential somewhere in here of about 20%, 19% there. So even from currently where we're sitting at $17, that's about 9%. I mean, could be a good buy. Also could drop back down. So if it were I'm actually gonna hang on to this thing and just wait. I want to see what this thing does after today, because today just seems like a very weird, strange day. Let's go back to AMC and see where we're at. Currently sitting at $12 even. Man, with a low of 11.76, so good time to buy. Looks like we're trying to consolidate at that $12 mark, so I don't think the hedgies like that we were at $14 last week. So looks like they want to keep us at 12. So we might get some buying power stepping in later this afternoon into what you guys call the power hour, but I like to call this first hour the power hour. I mean, look how we opened the day this morning with 2 million in volume. That's a power minute right there. So yeah, what was the last time we were at $12? I believe it was 2 Fridays ago. I have to go back like 2 weeks here. Let's go back to 20 days and kind of see. It has been quite some time since we were actually down here. I mean, that's on the 15th. That wasn't that long ago. 5 days ago. So I think, yeah, we had closed this 310. Kind of traded down. It's all right, you know. Gosh, I need to get some coffee here. Matter of fact, I'll be right back. So with that, I had to get some coffee here. All right, we broke that $12 here on the day for AMC. Not doing good, not doing good. I'm actually going to end up buying some more. I'll just wait and see where the bottom of this thing is for the day. It might be here. It might be right around this $12 mark. So I might be looking to purchase a couple of shares of AMC here. Not too many. I think I only have like $67 dry powder in my account right now. I'm down about $65 on my June 18th expiration for a strike of $40 in AMC, and about $63 in my 2 options calls for this Friday, $16 strike price on AMC. Let's take a look over here. You guys want to talk about any stocks that you see? Anything? I'll take a look at anything you guys want. right now we're just watching AMC. I'll probably jump back on and stream a little bit this afternoon through the real, well, not the real, but what you guys call the real power hour. For me, like I said, I think the first hour of the day you see a lot of volatility. You kind of typically see that at the end of the day as well. So I guess there can be 2 power hours, but I like to hop on in the morning, kind of see what's going on, and a lot of things sell off. We get a lot of, depending on what news happens after hours, we either see a big sell off in the beginning, or we see a huge massive push for that first hour, and things start to pull back. So traditionally, what I have seen watching the market is you'll either see a big sell off in the morning like we see here, or you'll see for about the first hour a rise and then kind of a pullback. So let's go over to my watch list and let's see what we can see. Almost everything down in the red today. TKAT actually up 6% on the day here. Let's go back over to TKAT then. Wow, I don't know what happened here, but in the last 20 minutes or so, they're starting to make a push, starting to make a run. So could they go back up? Let's take a look at this 5-day up to 43. So potential's there. I mean, %. They're already up 5. So I don't know. It's risky. It's risky. This is one of those things where I say don't chase it. Seeing decent volume for them. What happened? Did they get any news? No news. So just I think some leftover. Look, we're already in oversold territory here. Can stay oversold for a while before it sees a pullback, but I'm thinking we're going to start seeing a pullback here at some point very soon. So it just steadily going up, man. We're massively oversold right now. And we'll just sit here and watch this for a few minutes, but I think this thing starts to pull back just a bit. I mean, after it had that huge run up last week, I just can't imagine it's going to have another run up without any kind of news catalyst to push this thing any farther up. I don't really see it. I'm not really sure why it's doing what it's doing. Let's take a look over at CCIV. CCIV, man, massive sell-off. I know that they've been pretty volatile for the last few weeks here. Huge sell-off to open the day. Yeah, about 5%. That's not huge. It always looks so big. It always looks more dramatic, we'll say, when you zoom out and you're looking at these other timelines, or when you're looking at the zoomed out view. I mean, it just looks like a huge dump, but it really wasn't too bad. I mean, if we're to look at AMC at that same, I mean, that it's still trending downward. So, CCL, Carnival Cruise Lines. Let's take a look over here. This is another one that I think is going to be a good buy for the future. So if we were to go out, let's take a look at the 1 week chart or time frame, and we can see their high over the last 3 years was $67.69. Currently sitting at $27.95. I've got once we get through here, I mean, there's a gap here, gap to be filled, huge gap to be filled, and this kind of started, if you look here, the date here was on January 20th of 2020, and we all know what happened in the year of 2020, our Lord and Savior, Valentino Rossi. This thing just dropped dramatically here through that year and just kind of consolidated, and now we're starting to see that uptrend upwards. So, the problem with Carnival Cruise Lines is I don't believe that they have allowed any ships. They have not. So according to the story today, it looks like they have postponed restart due to COVID-19 curbs. So the operator said it now plans for Costa Smeralda, okay, to depart in Italy on May 1st with an unchanged itinerary. It initially planned to restart Costa Smeralda on March 27th. So stock was down about 4% in early trading on Monday. So I know that there's still, I don't know if any of them have started. Let's see if I see any news here. All right, here we go. Carnival Norwegian Cruise Line shares move higher after Royal Caribbean announces 2021 as return to Bahama cruises. So at some point they're going to return this year, and the potential for this stock to rise. We could take another look at one more thing before I dig into what I think the potential for this stock is going to be. And let's go to CCL, Carnival Cruise Lines. Does look like they do have a dividend that's down 300% year over year. Was up to about $2 in 2019 and dropped to 50 cents, but they didn't cut it completely. So right now, dividend yield is at 2.5%. So not too bad for now, especially if that dividend goes back up to $2. You're looking at about 10%, I believe, or just under 10% there. I'll take a quick look. Yeah, so under 10% for here. But the upside potential that I see in Carnival Cruise Lines with where we currently are at, and this is actually at 29.20, and we're actually down from that. Let me even go to 28. So from 28.01 up to this first level resistance, that's 85%. Up to $52.08 is where I have my my level resistance, and I don't really see another level resistance unless you look at this other support, because as we know, levels of support become levels of resistance. So let me set one here. And what? There we go. So even if it just hits this old support here, which is could be a new resistance, we're still looking, and this is from last week. I think I had put this on. We're under 28, so I mean I'll go down just to $28. Oh, so hard to get there. Still looking at a 42% chance of profitability before we hit that gap there. And then at 86% if we go all the way back up to this resistance here, or where this where it was at. So could hit here. This looks like it. I mean, it's a gap here. We definitely have a gap from this support level here. So like I said, potential here 36%, and that's not even from where we are today. If I were to go down, I'm sorry, I'm gonna have to just remove this here to tell you the truth. Let me set a new price target here at 28.01. So from 28.01 we're looking at 43% there to 39.75. So potential is there for profit. I don't know how long this one will take to get back up there. That's where I think it's going to end up going to. I think my brother put me on this one, as well as one of my buddies who had already scalped this thing once or twice himself. I think potential is there for 30 or 40%. High probability that we get to about 80%. And then if we want to take a look here at where this was at the high, we're looking at 140%. So could it get back up there, especially when this thing starts opening up? I think you're going to see a lot of volatility, a lot of buying power pushing into this FOMO. I think people are going to have a lot of fear of missing out, and they're going to jump in. It's just going to keep driving the price of this thing up before it has a correction. I think that's what we've seen a lot with a lot of the market, truthfully, where we've seen things just kind of really bounce back to where they were at, or even a little bit higher above, and then kind of pull back just because they were overvalued at the time. So this was back in September of 2018. So we could potentially see that. I'll set another price target here at this $67 range. Let's just put it there. That's at 67.48. So, or actually 67.63, I think. Let me remove that. I'll just lower that down just a little bit because, yeah, it touched those, but did it close in those ranges? Not, doesn't really look like it on this 1 week chart. So, just to give you some more time, let's set it there, 67.48. So, potential from today to its high over the last 3 years is 142%. Looking at 40% on where I think the next gap is. If we get that news catalyst to push this thing up, and they say, well, hey, we're announcing that we're opening all cruise lines, some big news catalyst will happen, I think this thing's going to rocket up, and there's potential there for 40%, up to about 80% profit, and could start trading between these two levels here. This is just what I think, but I'm not a financial advisor. I don't really know crap, so I'm just looking at charts. History does tend to repeat itself, and you can go back to any chart. I mean, technical analysis works. It does work. So that's CCL, Carnival Cruise Lines. Cinemark Studios, another one that my brother put me onto, and you know, I know that they have some Cinemark, and I'm an AMC guy, so I'm all in on AMC, but I think that there is potential for Cinemark. If you look on the 3-year, the high was $43.51, and that was back in May of 2019. So, looks like it started to fall off a little bit before we had the event of last year. So what I did was I took this price point from right here, which is $31.39, and said that this is kind of the baseline of where I see this thing should be without a crazy event like what happened last year. So from the range that we were at last week, and actually we're down today, man, everything is red today. So we actually might see a lot of buying power step in today, this afternoon, and gobble up some of these undervalued stocks. So currently sitting at 22.63. I'll just put a price target here at let's just put it at 23 even. 23 even. That's 36% increase there, just to 31.43. And if we get some kind of hype around this thing, something where everything opens back up, potential could get back up to $38 around that area. I just kind of picked this middle of the pack here, which is about 66%. So there's a chance here to make some profit. So who knows what's going to happen there? So it's actually okay to buy. I mean, right now we're kind of here. This thing, it looks like everything's making a pullback. I'll set the price line there, so we'll see. It still has a little ways to go if it does hit this down here, and that could be its new support down here, because right now it's trading a little bit below right here. So you got to take everything that's happened this year as a new, and you got to throw out some of this stuff over this, because this was just a crazy year for the year of 2020, and you can't really take any of this stuff in consideration other than the fact that it pushed down because of that, you know. Financials, we can take a look at real quick, analyze. That's CNK, Cinemark Studios, or Cinemark Holdings. Does look like they have a dividend, down 277% year over year from 19 to 20, from $1.36 to 36 cents. So lost about $1. Actually was increasing from 2016 from 108 to 116 to 128 to 136. Then, you know, the catalyst here in 2020 down to 36. So we lost that. So there is a potential that once this thing does get back up, you will gain a dividend, and right now the dividend yield is at $2.06. So if you buy at this cheap price point at this point, and let's say they announce they're going to bring back that dollar for the dividend, That's actually a very good dividend yield there for this stock if you bought at a price and your average share price around this $22, $23 mark. So just another stock to keep our eyes on for the next year. AFI. What is AFI? Armstrong Flooring. Don't know why I had this one on here. It's actually not doing too bad. I can't imagine flooring had much to do, but there's some potential here, and I think you're going to see this across the board in a lot of stocks of that year of 2020 just kind of beat down. Although this stock looked like it was going from 2018 just kind of down before we actually had anything to do with that. So yeah, you know what? I take all that out of it. Looks like they're starting to become healthy, but this level here in 2019, yeah, 848. I think that's it. So you've got some potential right now, I think, in here. What is that there? To make a little bit of profit. I mean, not much. That's 18%. I mean, on this little bitty chart. So that's at 513. Let's go to about 550. Yeah, I mean 13%, you know, from 531 to 630. So, yeah, you could scalp this thing. This could be a nice little swing trade. Let's take a more in-depth look here. So they're after hours. I don't know why. It looks so strange. But like I said, you're going to find this in a lot of stocks across the board where there's potential to buy something low and until it gets kind of back up to where it should be. FSR, Fisker, this is one that I missed out on. Just didn't really know. I was watching it back right around the time that they had an announcement. Something happened with them. Can't quite remember what it was. It was an announcement something to do with their batteries or something, man. What was it? 14,000 reservations for Ocean SUV electric vehicle. I think they got some other kind of shares. So Fisker, I want to say, is an EV company. I don't know if they create other cars. So let's just take a look at FSR here. Fisker Incorporated, formerly Spartan Energy Acquisition Corp., is an automotive company. The company designs and manufactures electric vehicles. The company also provides mobility solution. Its product Fisker Ocean, an electric sport utility vehicle SUV, the Fisker Ocean, available to consumers through a leasing package. So, Manhattan Beach, California. Look at this. That's where they're located out of. So, sounds like they released some information on their reservations for their vehicle and kind of got some people hyped. So I think I bought in. It was even before this because I think I bought and sold between like $15 and $16. Or actually, I don't think I bought in at all. No, I did not. I actually skipped this one because I thought I was getting FOMO. So it started to jump up. You can see my price targets down here actually where I set them. So yeah, this is kind of the range that I was in when I was taking a look at here on what I thought was going to happen. And I thought it was just news catalyst that was not going to last very long. So that was right around this $20 mark. I was going to dump quite a huge position into it. And, man, you know, hey, I missed out. But it is what it is. You don't always know. It bounced up a little bit, kind of had a pullback, and then rushed again. Another little pullback, and then kept pushing, and then now look at where it's at. So, you know, you can't really time this stuff. I mean, it could have been done here and then pushed back down, or even when it got here, it could have been done and pushed back down. Take your profits when you can take your profits, and don't chase things. These are just things that I think are going to help you become a solid trader. So potential within there, I mean, 60%. I mean, you know, potential everywhere. So GVA, this one is actually kind of an odd one. It's Granite Construction Company, but from my understanding is they make tombstone or headstones for grave sites. Let's take a look. GVA. Granite Construction Incorporated is a heavily civil contractor and construction materials producer in the United States. The company operates through three segments: construction, large project construction, and construction materials. The company operates across the nation, serving both public and private sector clients. Within the public sector, it concentrates on heavily civil infrastructure projects, including the construction of streets, roads, highways, mass transit facilities, airports, infrastructure, bridges, trenches, and underground utilities, power-related facilities, water and wastewater facilities, utilities, tunnels, dams, and other infrastructure-related projects. Within the private sector, the company offers site preparation and infrastructure service for residential deployment or development, energy development, commercial and industrial sites, and other facilities, as well as provides construction management professional services. So I guess they are not a tombstone company. So yeah. AFI, flooring, JDST, American Airlines. This is the one that you got to be careful with. Because in your mind, you say, oh man, everybody's going to start flying again. You know, we're going to go on vacation, stuff's going to jump up. But what you got to look at and be careful of is this. So 3 years ago, they were at the $50 mark, but they didn't see this drop off until right about here. This is February 24, 2020, and they were sitting right about $28. So there is still some potential here. I'll just set a lower level here. So there's still some potential within here. We actually almost touched, you can see right here if I zoom in real quick. You can see we almost touched that line that I just set there. And that's kind of maxing out. That's from back here. This level of support became this level of resistance. We're close to thereof. Actually, it could have been, matter of fact, if I were to erase that one and set one right there. Now, let's take a look over here now. There it is. Old levels of support become new levels of resistance, and vice versa. So, I don't know where this has to go, truthfully. This is kind of where it was trading at before everything happened. So, I mean, you might have some potential within here to kind of do some swing trades, scalp this thing. I mean, maybe in here. So maybe between here and here you've got 12%, you know, but first it's got to get past this level resistance here. So if we can see it pop over here, this $20, $25, $26 mark, you know, it's got potential to go up, but you need a good catalyst there. You need a really good third quarter earnings report of some kind, and I don't think that they have a dividend, which is another catalyst. You know, I talk about dividends a lot. They actually do have dividend. They're down 300% year over year from 2019 to 2020, from 40 cents to 10 cents. So dividend yield is 0.63, not even just a little bit under 0.75%. So not really a good dividend. Even when it was, I don't think it was a good dividend. So for me, you know, yeah, you can there will be a little bit of a push when they announce a dividend. Excuse me, and I don't think that they have on here. So you just gotta be careful when you have these thoughts of this thing is gonna go back up to where it was at before the 2020 event. Just gotta be careful because you might think, but just take a look back. Look at where it was trending. It was trending downwards, just stepping down. Is that a company you want to buy into? One that is just constantly going down? Or do you want to buy into a company that's inverse and going up, right? And then maybe they have this, and then you can see they're going to get back on track. So that's what you got to be careful of. Just look at where they were at. Yeah, we're going to see this kind of forming a little cup and handle here. Once, you know, give it a little bit more time and see kind of what plays out. Little cup, handle, and start to push. So that could happen. I've got this one on my watch list because I'm, you know, kind of thinking that there is some potential there. Hell, even 20% or 12% is still relatively good if you get some good news and things open back up. So let's form a little cup, little pullback, and could handle up and hit this level here. So there's potential there for some profit of about 20%. I mean, 20% is 20%. But you just got to be careful. A company that was constantly trending downward before the 2020 event, right now, you know, we're kind of riding on hype that this thing's going to get back up. That's my personal opinion. I did scalp trade this a couple times a few weeks ago, and there's potential there. I actually could have made a little bit more if I would have just held on to it, kind of swing traded it, but kind of got in, got some profits, got out, and that's just kind of how I like to keep it. Taking another look back at old AMC, the old girl, not looking good at all. Let me zoom in here manually. So just kind of trending downward on the day. Not a lot of volume. Could see that later on in the week. Not a lot of volume at all. At least not in the positive here. It's actually not bad considering what we have been at. Definitely more volume than we had on Friday, I believe. Other than this last 1 minute here, man, look at that. But that was right after hours, so which is crazy. So looks like we have found some support here, right about right here at this $11.80 mark. So it looks like it's trying to consolidate. It's bounced off this line. Looks like one, almost two, two, and we'll see. Little W there. Could bounce again and then start to pull up if we get the volume for the day. I mean, all we need is some good news. Actually, their ROCE came out, their return on capital employed. Let's take a look. During Q4, AMC Holdings reported sales totaled of, I believe I probably already read this. No, I did not read it for this one. Despite a 43% in earnings, the company posted a loss of $960 million. Yeah, so we talked about the loss already, but I don't know if we talked about this ROCE for AMC. I think it was another company that we had talked about. So it looks like their ROCE, which if you guys remember is return on capital employed, is an important measurement of efficiency and a useful tool when comparing companies that operate in the same industry. A relatively high ROCE indicates, man, I almost just want to call this Rose every time I see it. ROCE indicates a company may be generating profits that can be reinvested into more capital, leading to higher returns and growing EPS for shareholders. So The higher the ROCE, the better. The lower, the worse. And we're just above 0 at 0.34. So, you know, just kind of keep this in the back of your mind. A lot of things don't really count for this year. Looks like we're getting a little push here on AMC. Let me zoom back in. And we're starting to ride back up a little bit. Let's see if we can see where I think level support might be. 12. I mean, if we can get past this $12 mark, we'll see what happens here. Yeah. This is the tough one. I mean, you can see in here, if we can just get past this $12 mark, I mean, yeah, it's a level resistance there. We pushed past it, kind of got up, used it, broke down to the support, then used it as a level resistance again, and again, and again, trading down. Now we've got our new support, and now it's a new level resistance. So if we can get past this $12 mark, we're going to be setting pretty good for another little gap up to 12.18, and then up to 12.30, and on and on. Level 2s, what are they looking like? 1193, 1194, so not too bad. 1131, come on. 1193, 1192, so 1193, gonna go up. No, gonna go down. All right. I'm going to let you guys watch this for a second. I'll be right back. All right. Yeah, we're kind of just holding strong here. So I think we'll just barcode like this throughout the day today. We'll see. We'll see what happens after lunchtime. Let's check the SPY again. SPY, which is the S&P 500 ETF trust here. Kind of good indication to show you what the S&P 500 is doing for the market today. So yeah, it's kind of consolidating. So in reverse of what we see with AMC, or let's take a look at GME, see what's going on over there. GME down, consolidating again. I mean, if you were to put these together, man, that looks massive, because it is. Yeah, I mean, looks like we had a bigger sell-off here. Matter of fact, I'd have to get rid of some of these indicators to kind of show. Or I could just add them on. I don't. Oh, there we go. Don't know why that happened. Oh, gotta do one more thing here. How do I do that? Oh, here we go. You can see we had a more of a sell-off here in AMC, but the price action kind of mirrors each other between GameStop and AMC. So just trended downward. Now it's kind of consolidating and barcoding. So we'll see what happens in the rest of the day. Looks like you know, it is what it is. Might be a slow day. So yeah, I want to thank you guys for watching. I think I'm gonna hop off here. I'll hop back on here in a little bit, maybe right after lunch, maybe for the second power hour of the day, first hour and last hour, and just kind of recap on what happened with the stocks throughout the day, and we'll go from there. But I want to thank you guys for joining in, and I'll see you in the next one. Peace.